Wall Street bonuses might be a little less sweet this season thanks to the challenging economic environment that markets are anticipating. They're already preparing for something that's not here, which is kind of interesting. A lot of companies. Banking advisors could see bonuses decline as much as 20%. Goldman Sachs warning traders that while revenue is on track to top $25 billion, year-end bonuses are being cut. Joining us now is Lydia Moynihan. She is New York Post Wall Street reporter. You know what I mean? They're preempting bad times. That's a good idea, I guess. If you want to cut someone's bonus, you say, well, things are, the outlook is kind of cloudy.
It's going to be a brutal surprise, but maybe less as a surprise if you're given a little bit forewarning. But I don't think it's any surprise that investment banking revenue, which is down 50%. Very few SPACs, IPOs, secondary offerings, right. M&A activity. No surprise that we're going to see those bonuses dip 35, even 50% commensurate with the decline in revenue. But it is a surprise that trading and sales revenue, even though they're outperforming, we expect to see those bonuses dip, which seems pretty clear that banks are trying to say, we're alarmed about the future. We need to prepare potentially for a downturn. Looking at the tea leaves, it could get a lot worse. And there's been reports about job cuts, kind of some culling 1-2% at Morgan Stanley, Goldman Sachs, but we're hearing that could be closer to 5%. That culling could be sort of just the first wave. And I think it's going to be a much leaner workforce. There's going to be fewer people working harder like in the old days of investment banking. I don't think you're going to see an MD putting paper in the printer, but he might be putting pen to paper.
Were there a lot of average people getting these huge bonuses? Or what happened to paying for talent? What happened to keeping and retaining talent? We hear these guys are rainmakers, these guys on Wall Street. I mean, rail workers and pilots can command 34% raises, 30% raises. You can't do it on Wall Street. It's an employer's market, not an employee's market.
They already got the 30% raise a long time.
You know what I mean, though.
For the base, the real workers are not anywhere near.
I'm not saying that. I'm saying that in this labor market, labor is very tight for highly skilled people.
I don't think these banks were culling people like they traditionally do over the last several years because of COVID. I mean, I think they were
trying to beef up all of their divisions because they didn't have enough people to get the work done. Well, now there's just not a lot of work to get done at all.
If you come back to the office one day a week, do you get an automatic bonus just for showing up, or that doesn't qualify? Is everyone back? Does that earn you any goodwill?
Fear is the ultimate motivator, and it was actually really difficult. We did some reporting that Morgan Stanley over the summer, even after Labor Day, they were really struggling to get people back to the office, and it's only really within the last month, 2 months, where people are back at their desks for even 5 days a week. Because when you are afraid of losing your job, you want to be near that center of power. If you're out of sight, out of mind, you are much more likely to get cut. And it's so much easier to pop into your boss's desk and say hi and check in as opposed to trying to schedule a Zoom
participation trophy game
through their assistant.
Right.
I think the perks. The real rainmakers still get the big bonuses, though? I mean, are they afraid of losing the very key talent?
High performers are always going to be rewarded, but it's going to be much more of an eat-what-you-kill environment, and there's just less to go around. So I don't think that you're going to see them making the bonuses that they did last year. I think it'll be still very generous, much bigger than my bonus, but it's not going to be what we saw in 2021 because they just don't have the revenues. I also think all of those perks that we were talking about last year, because it was all about banks trying to make sure that employees had good experiences, and now the tables have turned. Employees just want to make sure they get any sort of banking experience. So the free coffee, the free car rides, the free food, that is all gone. I think if you're flying first, you're going to be flying coach. If you're flying coach,
you might be on a Greyhound.
I want to generate